everybody. Welcome to the TraderMerlin Show. It is Monday, the Manic Monday, the final day of August, which, of course, as you see in the numbers, has been a great August. Things looking pretty good out there for the final close. Hope you had a great trading session out there. I hope you were long Tesla. Most of you probably weren't, but some of you are. I know you're Tesla fans. We'll talk about Tesla's stock price here, as well as what happened with Apple, reshuffling of the Dow components as well. Hello to Ron and Brendan. Good to have you with us. Marco Gayer, Koja as well. Big Eb Tom. Jorge Tomasina et al. I see we got quite a few out there. And let's not forget Larry, who was the first one to comment in the chat today. All right, you guys have probably been following Tillie Allison's Market Outlook, which we release every Sunday at 1 p.m. That's Pacific time. Of course, give you plenty of time to look at those levels for the upcoming trading week. It's a little bit challenging now because we're at all-time highs. We hit another all-time high yet again today on the S&P 500, which has a lot of people scratching their heads as to where this thing's going to turn. I'll tell you what. It's going to continue up until it finally turns, and then once it turns, then you can say it turned. Don't try to pick this top, guys. It is going to keep on rolling until it doesn't. As you can see from the chart we've got up here, topic du jour is the running of the bull market. And I actually took this image as of close today, so we got the small little spinning top formation today, which some people think might be a reversal pattern, but we'll talk about that later. Let's just get into things with lovely and talented Tillie Allison-Harris. Tillie, how you doing today?
Great, Merlin. Glad to be here. Love all the comments. Hello, everyone.
By the way, I say this on behalf of everybody that watches those videos. Thank you very much for taking the time and effort on the weekend to put together those levels, because right now you're just picking accumulation zones, right? Because we have no real distribution stuff, but at a certain point we'll be back to accumulation and distribution zones. So thank you for all the effort.
Yeah, I love that, and I hope that people find it helpful, because one day there's going to be a big distribution area, and it's probably going to show up on these stocks that we talk about today first, because they run the market. And then that's kind of a heads up that, hey, if we haven't already taken some profits, probably a good time to do so. Absolutely.
Let's dive right into it, because the topic was the running of the bull market. And we've had this conversation with a lot of different guests, which is this disconnect. We have this handful of companies that are doing phenomenally well, driving this market, and you mentioned earlier, said it's like the running of the bulls. So let me get your take on what it is, and then we'll have a little discussion back and forth. And of course, if the audience feels like it, go ahead and join in the discussion today. So what is it about this running the bull market that you want to talk about?
Well, it's crazy that only a small percentage of the S&P 500, the NASDAQ 100, are running the market. You know, these markets were developed many years ago. You know, the first index was created in the late 1800s by Charles Dow himself, and the indexes were designed so that there would be enough sectors so that whenever the market does have weakness, that there would be money flow into consumer staple products like food companies, gasoline, you know, pharmaceutical things that we have to buy. And if there's not enough money flow into those products, like, you know, think about the goods that you have to buy even during a recession. Those buyers and those companies hold up the market. So if there's not any investors heavily invested in consumer staple products, whenever the bubble does burst, if it's so tech heavy like it is, and those investors pull from that, you know, and there's so much liquidation and money flow out, the market falls at an extremely high rate of speed. And I think the Fed is also very aware of that, so that's a good thing too.
It is, but I mean, what do you do about it? You know, we did the show with Brandon Wendell the other day, and maybe when Brandon's on this week, I think he's on tomorrow. I know he's on this week sometime. We will talk about maybe that when you remove those 5 companies from the, let's say, NASDAQ 100 or the S&P, the results are staggeringly different. Like, it's incredible. And, of course, if you saw it today, guys, I'll bring up the chart of Tesla just so the viewers out, if you haven't seen it, take a peek at this. This isn't Tesla. This is actually Zoom today, by the way. Zoom actually reported earnings after market close today, and you can see that it was already up to like 325 by the market close. A huge day. They reported earnings which was over almost double expectations, and now they're up 20% on the day. But let's take a look at TSLA. Of course, you guys know that they officially did their 5-to-1 split today. That means for every 1 share you had of Tesla, you now own 5. And it was a little bit of a weakness early on. You guys can see it was slowly selling off before the market opened, and as soon as the bell rang, I'm sure that this was a lot of Robinhood traders just gobbling it up. It rallied from a low of 440 up to a high, give me the exact high there, TJ. I'm going to still call TJ out on this one, but high at 518. So you're looking at about a $78 swing there from low to high on Tesla. Just powering to the upside. And my question for you, Tillie, is this. You study the markets. You love looking at all the market activity, all how these relationships work. It seems to me that in a normal situation, we have money flowing into the market, right? And of course, you're going to want to buy the broad sector, so most people are looking at buying the S&P. But right now, we're in a moment where 5 or 6 stocks are clearly leading, and what it feels like is happening is the money that would normally go to some of these other companies is getting pulled out, showing weaker share prices, and it's pouring into these 6. And it's not that this has never happened, but the influx of capital into Apple, Tesla, Microsoft, Facebook, Google, Amazon is just off the charts. What is the risk that you see systemically for that?
Absolutely. So it's very similar to the dot-com bubble when the dot-com companies really ran the market, and that volatility is tremendous to the upside. So, you remember Alan Greenspan called it irrational exuberance. Mm-hmm. And whenever investors clearly know that the balance sheets, the GDP, do not reflect the value of these stocks, and therefore, like you're saying, the money flow coming into these stocks is driving up the price. And there's many other stocks as well. Microsoft, believe it or not, is what, 220, where are we closing at, 225 a share today?
Yep,
so
225.
Yeah, so the good thing is that a lot of other companies are also extremely bullish as well. But yeah, the volatility is going to increase both on the upside and on the downside, and volatility always falls 4 times faster already. Mm-hmm. So as people are managing these long positions, it's very important to take profits, periodically, so they don't get caught, lose their shirt.
It's funny that you mentioned Greenspan. Let's do a trivia question for the viewers that are watching right now. Irrational exuberance, one of the most famous comments ever made by Greenspan. I actually love that one. I'm asking the viewers, when did Greenspan have that speech where he talked about irrational exuberance? Now, don't go out and Google it right now. I'm just seeing if you guys can think about it. And I'm going to bring up the chart. I'll make it full screen for you guys all to see. And we will scroll back here. Hopefully I have enough data. I'm going to need to go back even further just to show you all the picture. But type in the chat what you think, what year Greenspan said irrational exuberance. And I'll go to... There you go. You guys can see the chart I've got from 91 all the way to 2000. So we're going before this thing even crashed. Type in the chat, where do you think Greenspan said irrational exuberance? It's funny because we look at this picture and many of you are probably thinking it was late 99, early 2000, right? Like he was picking the top. Hell no. Greenspan didn't have a clue at that time. Here is the vertical line that you're seeing me put on your screen right now. Shows you where Greenspan said irrational exuberance. And for Tom says 99. Ryan Johnson nailed it, my friend. 96. Harrison, I think 87 might have been a little bit before Greenspan. It was actually 1996. It was December 5th, 1996. And what's beautiful about that is you look at the move that happened from 1994 to that date when he made the announcement. It was a 65% move in 24 months. So we're looking at, 33, 34% per year. He called that irrational exuberance. From that point, it rallied another 108% in 39 months. It was almost like he signaled the rally. So, at this point, a lot of people are looking at our current market situation, calling it irrational exuberance. Guys, I hate to say it, but this could go much, much higher based on this euphoria that we have and money that came pouring in. A question came in from Brendan. Tillie says, can we go higher this week? I'm pretty sure you're probably thinking that's where we're going anyway, right?
Yes. So, we can never say for sure anything, and there's always a 50-50 chance, right? Yeah. But usually if there's not a lot of distribution areas above, if there's not clear indications of when the big boys are selling, and there's so much. I love the comment there. It was the comment about euphoric exuberance now. Love that. So, yes, the market can go higher. But the tricky part is oftentimes it goes lower before it goes higher. So today's low on the S&P was what, or the afternoon low anyway, was what, 34.94, and then it swung back up. It swings down and it closed, off of a low again. So the problem is it can always swing down significantly lower before it goes back up. And then that's what makes it more challenging to be able to manage a trade. But what I love is how we're all talking about the fact that we're in a bubble. And yes, the bubble can go on for years. And knowing it is a bubble, we can be a little more tactical in our management and not mistake a bull market for brilliance.
Yeah, dude. Yeah. What's the? There's another line. You said don't mistake a bull market with brilliance. If there's another one that says if you can't dazzle them with brilliance, you baffle them with bullshit. That's another one I like. This market right now, it's continuing to run up, and yeah, I love the euphoric exuberance. That certainly was what it is. I saw an interesting thing by an analyst, and he's calling a new bubble. It's the FAANGM bubble, which I would agree is probably it. What's your thoughts on people? I guess throwing away valuations. Do you think that the valuations of Tesla and some of these companies have gotten a little bit out of hand that just because of how much prices have moved?
Yeah, there's always it's always said that the price of a stock leads the product, if you will. So valuations and those analysis, we know that it does require 3 to 6 months literally for the books to get balanced, and that's if they don't get cooked in the process. So balance sheets, earnings, revenue expectation, debt ratios. Debt ratios is the big one. Obviously, because debt ratios and things, companies can, this whole EBITDA tax thing and how they can sort of not always include all the debt on their company. And then by the time we find out how much debt there is, even the professionals in the industry very well know that the fundamental analysis is lagging. And that's the biggest problem. And we make money off of price, not fundamentals.
Mm-hmm. Well, interesting times. All right, so we talked about the FANGs. We talked about leading. Are there some other stocks you want to analyze? I know you had a couple symbols that you wanted to look at specifically. Were there some that you want to share with the audience as far as kind of being the bull leaders?
Absolutely, but I think we already talked about the FANGs, and I was looking at them all on a 4-hour chart because on a 4-hour chart across the board, if we look at Apple, Facebook, Amazon, Netflix, if the market does pull back, so on the 4-hour chart, at the end of the day, Amazon had a sell-off. Apple, I think, closed lower. Yeah, it closed lower than the high. So I think most companies here had a little sell-off at the end of the day today. And like you were saying, that there's maybe some sort of a little bit of a bearish reversal. Mm-hmm. And I'm looking to see, like on Apple, on a 4-hour chart, there's an area of accumulation, called a base rally, about $125 a share.
Yep.
So on, you guys looking at Amazon?
I'm whatever you call out. I'm on Apple right now, so.
Okay, perfect. Yeah. Okay, great. So Apple 125 a share. We can see that area. And what we'd anticipate is that prices would continue to trade above that. Whenever we look at an area of accumulation or demand, whatever you want to call it, the fact is that's where big companies bought and caused a big rally. And products don't always, fall back to that area. But it does give us a good reference point. So It can help us be a little bit more comfortable with our long positions if we know where the buyers bought in, because, oftentimes that will cause other buyers to come in. So remember how the market is structured. That big professional companies out there trading like Goldman Sachs, Morgan Stanley, Bank of America, they make billions and trillions of dollars in this industry, trading derivatives on these stocks that we're looking at. So they certainly are going to be running this market. And if we can identify what they're doing, it can give us more confidence. So the real reason that we're looking to find these areas of accumulation and distribution is just to better manage our positions. And so like Apple having that area of 125, we would expect it to trade higher. And if it drops below that, that could be a big kind of sentiment shift. Another one I was looking at is Facebook. About $280 a share on Facebook on the 4-hour chart as well. Mm-hmm.
Facebook's been a phenomenal one. I mean, I think he's just gone gangbusters over the last couple of days. I'm going to just throw a nickel in here, not my 2 cents, but my nickel on it. Guys, if you look at the excitement that happened because of the Apple split and the Tesla split, from my experience, when you have these splits, there's usually a big run-up leading into the split because everyone wants to have the extra shares because there's somehow this stupid mindset that, if it does a 4-for-1 and it closes at $1,000, I'll have 4 of those tomorrow, so I basically make $4,000. No, that's not the way it works, guys. Of course, it drops by 25%, or actually the value dropped by 75% on a 4-to-1 split, but you get 4 times as many shares.
Right.
When that happens, you got to think of human behavior and human psychology here, especially what happened out there today with Tesla. Part of the reason the companies like to do splits is because it's now become more appealing and easier for people to lower price points. So some people now will have access to Apple and Tesla. The real big money, though, will be selling those shares and locking in some profits that they've made off that big run-up. So I would be, my personal feeling is this week, you will see Apple and Tesla start to sell off. Today is fine. That first day, that's just, to call that retail investors now gobbling up a cheap Tesla. But keep an eye out this week. I would be waiting for it to make some lows and some signs of lows. But normally when you have a split like this, people start to take profits because they feel like they made a bunch. They want to lighten up their position a little bit, and that's just my experience. And there's Don Franz who's going to tell me I'm totally wrong. I'm going to keep going long on Apple and Facebook. Right, Don? All right, Tillie, what do you think? Am I nuts there?
Well, not exactly, but remember that a lot of investors, like professional money managers that have clients that their portfolio can't afford those expensive stocks, their clients are calling them saying, hey, I wish I had more of that. This has been going on forever. So the stock split typically does attract more retail investors. But remember, we, always call that a retail trap. It's kind of like, back in the day, I don't think people realize that, one of the reasons that the stock market crashed in 1920, was it 29? Yeah. Was that there were these things called bucket shops.
Yep.
People wanted to buy stock, but they couldn't afford it. So they went down to this bucket shop and they didn't even know what they were buying, but they were buying derivative. They didn't even own the shares. And again, at least with the shares being split, people are actually buying shares, which is kind of a good thing because something's got to hold up that stock.
Yeah. Yeah. All right. Well, keep an eye out for the shorting this week. It's funny because I'm hearing so many different things that, Tesla and Apple are the most shorted stocks in the market. Well, this is why you got to be careful because if you're short Tesla right now, you're probably broke. I mean, that's a fast way to bankruptcy. Other people, I saw a comment, some guy's Twitter feed the other day saying how Warren Buffett's an idiot. And I'm like, really? Do you know that 44% of his portfolio is Apple? I'm pretty sure that's not an idiot. They've made him a few $1 billion over the last couple months. I mean, come on, man. All right, what other stocks, Tillie? I know we talked about the FANGs. You had was it ABT that you sent me?
Oh, Abbott Technologies.
Yes.
So, what I like to look at, aside from the FANGs is what other, sectors are showing a lot of strength. And there was some comments in here about the reports of COVID cases and things and treatment and whatnot. So I don't know if Abbott Technologies was related to the COVID, but they were one of the, weekly leaders last week. So I was looking at that stock. I'm also looking at XLP, which is not near as sexy as some of these crazy stocks, but XLP is only trading at, 60-something dollars a share. And XLP is almost like a mirror image, if you will, of the S&P 500, because a friend of mine was, telling me that their portfolio that they're managing is not very big and they can't afford the S&P 500. And what would be a good substitute for that? And so XLP is priced much more, feasible for someone's retirement account that they want to own S&P but can't afford it, right? $300 a share, that's expensive. So XLP is much better priced. I think it's 60.
XLP is 65, yeah.
Yeah. So, and the option spreads I think are about a nickel. So that's another thing that a lot of traders and active investors use option strategies. And the more volatile the stock, sometimes the spread, can really crush somebody. So, finding products that are safer to trade. I think the most important thing, obviously, in our portfolio is safety.
Yeah.
And, not carrying too many positions in extremely highly volatile products, just to buy and hold, if you will, hoping that it keeps going up and not, using some sort of tactical management.
Tillie, it's funny. I'm looking at these charts right here, and we were looking at, you said it's maybe not as sexy as some of the FANG stocks. I would actually say this is sexier than the FANG stocks because the move is cleaner. It's just a real straight up move here. So I like XLP, and of course, this is a normal. In a period like this where you have the COVID and all that garbage, that I'm not cutting back on toilet paper. Hell, I can't even get toilet paper. I got it now. Don't worry. The towel collection had to get new towels, but. When you look at consumer staples, I'm not cutting back on toothpaste. I'm not cutting back on that stuff. So this would obviously be a logical target for money flow. It's just kind of the craziness of Tesla and some of these other companies that have just vaulted recently. What is your thoughts on Abbott Labs? You mentioned, I'm not a fan of drug stocks personally. I've just been burned too many times, so I won't touch them anyway. But, you look at that gap up you had in Abbott Labs, and this, again, is the talk about them potentially coming up with... being part of the COVID discussion, the vaccine, and I'll bring up ABT for you guys. Here is the big jump up, and obviously it's not monster. It went from just over 100 to about 113. What is that, 113, 112? 114. Now it's selling off. I mean, I'm more inclined to think this thing's going to end up filling that gap, Tillie, on the daily.
Right on. And so, like today there's a sell-off at the end of the day on the S&P, and a lot of these stocks showed a little bit of weakness end of the day. So the more stocks that we look at that ran up last week, and if they start to fall, that just explains, the correction that we have, however small it is. So companies that have these, big gap up, especially over the weekend or, on a daily here, so that actually happened midweek last week, expecting that, a lot of the time these gaps do fill. So that can be a sort of I think, confidence boost if we know why the market is correcting, which stocks are kind of dragging it down, if you will. And then to keep our eyes on that, because obviously if this, company does have some breakthrough along with the other ones, that would be more strength coming into the overall market. And that would be more confidence to the upside again. So, yeah, I think we're probably experiencing the biggest bull run, all of us here have ever experienced. And I am very conservative. I have a habit of trying to reallocate periodically because I'm just all my life I've kind of always been scared to death to get caught in a downturn. And when we had the COVID crisis, the four times the market went offline, that was a little bit hard to manage. But fortunately right now I've been a little more calm and more confident because of all the things we've been looking at leading this rally. And I don't know, I'm sure you guys may feel the same way.
Yeah, I think it depends on the people. If some here are extremely aggressive and are going to buy anything, I'm pretty aggressive too. Of course, everybody knows my short bias got me killed earlier, a couple months back. So we'll just have to chip away and work our way back into things. I'm definitely of the opinion that something's going to give here at some point, but you can't argue this trend. I mean, these moves have been absolutely phenomenal. I'll measure from the lows here just so you guys can see on the SPY. As of today, you go from that session low. Let me just do some snap tools for you guys to where we closed at today, which was down. Yes, down, a down day. A 59%, call it 60% move in 161 days. So you're really looking at half a year, 6 months, basically 10% a month. Pretty phenomenal run considering the historical average going back in the 1950s is between 8 and 10% for the S&P a year. And here we are getting that per month. Pretty remarkable. Tillie, Adam says, do you trade Globex on futures or the RTH?
So RTH, are we referring to the Russell 2000?
Well, no. I mean, that's a retail ETF is RTH. Obviously it's not the futures. It's gonna be RTY. Is that what you're talking about there, Adam? All right, so let's look at it from two fronts. Do you trade the Globex? Do you trade the Russell futures?
I use the Globex price points, but not. So Globex, I think some people, and I apologize, I think the garden people are like outside. So Globex, sometimes people refer to as the 24-hour market, and then sometimes people are more specific. So I use Globex specifically if something is worth noting. So let's, like the high last night on the S&P 500, I think, where are we at? Like, I want to say 34.53, I could be mistaken, but I always make that funny face when I say that. So, I try to think like, what was the high last night? So the Globex high and low can give us a reference point, because obviously if there was buying and selling in the European session or in the Asia markets, that can be something for us to reference during the day session. And oftentimes we'll see some additional buying and selling in those areas. But because the accumulation distribution oftentimes is so sloppy, then we really have to wait for the real, like the market open session and new zones or levels to form to confirm those areas, because sometimes the Globex levels can be real what we call sloppy.
Yeah.
Money flow in, U.S. stocks are not trading. So the money flow in has to come in with a lighter volume, if you will. And if it has lighter volume, the moves are going to be more saturated. Mm-hmm. So price movement will be like more of a stair step instead of a big rally. And that can be kind of harder to understand what's going on.
Yeah, Adam, I trade whatever time. You just have to know that trading in the Globex market, you're gonna have much lower liquidity, so that's a little bit of a risk there. But I'm happy to trade them all. I'll trade regular market hours, after market hours. I don't care. And Don, I agree with you. I think that you'll probably see. I'm not sure if it'll be tomorrow. It does feel like it's going to be tomorrow. The way that we ended, right? You had so much euphoria going into the weekend, and all of a sudden here we are. The excitement's out, right? Apple's done, Tesla's done. You're like, okay, well, what's going to fuel the market this week? Clearly, we're not going to see our red and blue leaders shake hands and sing kumbaya. We'll probably see more tension, more issues going on in the U.S. So get ready for a little bit of profit taking here going forward. There's another question out there, Tillie. There were a few that were coming through for you. Let's talk about catalysts and fuels, I guess, since that's what Naum is asking about. He says, is all this uptrend related to negative bond rates along with the expectations of inflation?
Well, everything is priced in, so it's kind of known that the long-term investors are going to stay long the market until interest rates rise, and so that's just historically been kind of a telltale. But with the Federal Reserve literally so active in the financial markets these days, the Federal Reserve literally buys securities, they buy bonds, they stimulate the market, and they control inflation. So you tell me. Obviously, they need to have a good plan before they raise interest rates to be able to manage what inevitably will happen. The last time they threatened to raise interest rates, the market dropped 20%. So, whenever they do threaten or take action to raise interest rates, it would be nice if they have a better plan than just letting it fall 20% and then have to kind of scoop up the pieces. So, isn't it interesting to know that the same organization running this market is the same organization that calculates inflation?
Yeah, to me, it's not necessarily the bond yields. I think if I had to put my finger on what's driving it, it's pretty clear. It's pretty clear to me that it's the government and Fed and capital, right? You still have a ridiculous amount of people unemployed. Keep in mind, we'll have the unemployment numbers this Friday, which is expected to drop to 9.8. It was 10.2. I think anything getting below 10 will be optimistic. But guys, remember back in 2008, we hit 10%. It felt like the end of the world. Well, now we're just shrugging it off. Markets at all-time highs and absolutely ripping to the upside here. So it's the fact that the Fed is backstopping anything that's going to fall, right? So you basically have the Powell put. It's just not letting anything fall. Not only are they not letting it fall by backing mortgage-backed securities, municipal bonds, corporate bonds, all that stuff, they are also pumping more money into the economy. So you have more money chasing the same amount of goods and services. That's going to obviously drive their prices up. And right now people are looking for where can they make money. That's in the equity market, right? You're going to go buy equities. You're going to buy stocks. So that capital that's coming in is going straight into the market. Is causing this bubble to form. The question is, at what point does that bubble start to implode? Who knows? It could go for a long, long time. I mean, back a few months ago, if you go back about 5 months, I was saying, look, I think we're going lower. And then I made the comment midway through that trade that I was in and said, look, if we get America back to normal and realize that COVID is not as intense as it was expected to be, and I think a lot of people would agree that this is just a little bit overdone here. Whether you're a red state, blue state, doesn't matter to me. I think we need to be careful with the masks and such, but I do think a lot of people will agree that it's probably a little bit overdone, not as bad as it is made out to be. If we come out of this and all of a sudden things get back to normal, plus you have $7 trillion of fresh money pouring into the market, and we're back to right where we were, then we're going to 4,000 on the S&P, like that. We're going to go real quick. So I think that's part of what it is. It's also, you have a lot of Americans right now who are, I apologize, they're sitting on their ass doing nothing because they know they can make more on unemployment than actually go and work. So now they have more money to spend and they don't do anything. So they're going to spend money. So it's a combination of many things. Certainly the bonds are a factor, but I think it's more just the trillions of dollars that have been pumped into the market. That's my take, Tillie. Am I nuts?
No, I agree with you 100%. And I think it's crazy that our belief system, is labeled with something in politics, and a lot of things backing those organizations and those beliefs are not true and accurate. So it's really something else in our society that's probably more toxic than the stock market itself, as far as, once someone realizes that the stock market is very different than the financial markets that we invest and trade in, like with ETFs and options and derivatives. That's a completely different market. And it's very real, meaning that society, most investors, you go to the grocery store and you ask anybody in line, well, you can't really because of COVID, now you got to be 6 feet away, you're not screaming your mask. Hey, do you have any idea that, if you could buy, gasoline wholesale, would you? And everyone would say yes. Then you say, you could buy a mutual fund wholesale too. They would be like, what are you talking about? No, I can't.
Yeah, right. Abby says, guess the Fed's not going to allow the markets to fall to March levels, otherwise pumping all that money would have been in vain. Yeah, I think it's bottom line is nobody wants to have any egg on their face, so to speak, at the end of this. So they'll do whatever they can. It's one of those things that if you knew that you could do something right now that would completely screw this country in 15 years, would you do it? If you knew that today it would benefit the country. And I think that's what's happening, because they're like, in 15 years, I'm not going to be around. I don't care. What are you going to do? You going to tag my tombstone and with graffiti? I don't care. I made it look good while I was alive. That's all that matters. So I think that's what you're getting.
Yeah, it's always better to go down in the history books as being, the bond or the stock, and like bond prices right now are crazy too. Yeah. So go down in the books as being a bubble catalyst, and then it's always the Fed chairman that comes into office during the crash that takes all the heat like it's his fault or her fault, and inevitably, no one realizes that the crash is the effect of very bad mismanagement of debt. And no one seems to point the finger at the fellow or the gal that was in office, the 4 years prior during the bubble, right, so allowed it to happen. It's kind of like, oh, let's not go to the doctor. Let's just ignore the symptoms of a pandemic or whatever crash.
Yeah, well, it's point the finger at the other guy. Don says, I bet that the bubble doesn't pop either. Inflate but stall out and cool off. Yeah, and I guess it begs the question of what do we consider a bubble popping, right? Because if you take the intermediate picture, I'm thinking you're going to have a bubble, and it's going to crash. It's going to crash pretty big. But if you take the bigger picture, that crash is just going to be a buying opportunity for a much bigger up move. I mean, the markets will move up over time. It's just really about market timing, making sure that you're there when it happens. Because, I'm not saying crash and all of a sudden S&P is down to 666. I think that's unreasonable at this point. But, do we get back down to maybe an 1800 level? Do we get back down to 2200? Probably at some point. But I don't know. We'll have to wait and see what happens down the road. Does Tillie ever go to the annual meetings for companies of stocks that she owns? Oh, yeah. You would probably like that, wouldn't you?
Oh, wow. But I do, for fun, I like to read the big prospectus. You get them in the mail, the big ones. I like to read about all the guys that have like trillions, literally. These are multi-billionaires. And so reading some of those, the prospectus, if you will, about those companies is amazing. But I don't think I could handle talking about all of the things that really go behind the scenes of a company. Oh my goodness. Mm-hmm. I am a little bit jelly, some of these guys that develop really cool stuff, and gals that take these companies public. That's amazing. Like Tesla. I mean, don't we all agree that the valuation of that company does not represent the value of the stock?
I don't know if we all agree. I'm sure some people think it's undervalued right now. I mean, that's the crazy part about Tesla. I mean, you look at their PE ratio, and well, yeah, it's only 1,300. Big deal. 1,300 PE ratio. Oh yeah, historical S&P is what, 15 to 18, and here you are at 1,300. Okay, sure, why not? To insanity and beyond. I think it's overvalued. How many people, and just curious, how many people think that Tesla, in the chat, just like to get chat going, how many of you think that Tesla is overvalued at this point, like significantly overvalued? Not a little bit, but significantly overvalued. I'm curious to see. I know a few of you are going to be like, nope, undervalued, it's going to go even higher. Totally fine. We'll only know who's right after the fact. Down the road, time will tell. All right, while I wait for that wonderful reaction, what do you got on your plate? What are you doing? Are you teaching again? I know you're doing some classes out in Kansas City.
I'm going to Florida to try to get on the beach for Labor Day weekend, but with COVID and all that, you got to get to the beach early, and we're not really like early beach goers. So heading down to Florida to enjoy the holiday weekend, and really excited about that. And then we have class middle of September here in Kansas City. But what I love is some of the viewers that we have here on this TraderMerlin YouTube show, and some of the students here in Kansas City have been tuning in, love that very much. And I was laughing at, we were talking about Tesla, and I want to know how many people have trail stops on their positions, so that if it does turn around and drop like a rock, do you know where you're going to be, and it's not going to crush you? Yeah,
trailing stops are awesome. Keep those trail stops in place. Let them ride, especially in a market like this. Don says, what's Amazon's PE? Amazon's PE, I just looked it up, is 26. So if I look at like a real solid company that's making just money hand over fist, you cannot go wrong with Amazon, right? It's right now you're looking at 26 PE ratio for Amazon, which, in normal markets, I think some people would say that's actually overvalued. I don't think so for what Amazon does. Now, 1,300, it's a little bit overvalued. I think most of you agree that Tesla is just a little bit crazy with its valuation, but we'll see. Tom says Tesla's grown to 10 times the size of all automakers. It is an automaker. It is an automaker. Yeah, I don't know. I think it's a little bit overdone. I'm just kind of excited to watch it. It's one of those ones I don't usually trade. I've made a few trades this year on Tesla, but it's not a real active one. I will probably be looking to some puts here soon if they don't get too expensive. All right, Tillie. Anything else you want to add? Anything else you want to go over real quick before we wrap up? Oh, but by the way, let me give you a gratuitous plug because I deserve it. I got a copy of your book, so thank you so much. I'm reading through it. I love the whole history overview of the Fed. It's some interesting pieces in there that I didn't really know about, so that's good to hear. Here's Tillie's book, guys. If you're interested, you can go to Amazon and get The Fed Effect, the centralized federal banking system. That's now on paperback. I think you can also get it on Kindle, but paperback one just came out. So Tillie, thank you for that copy. What, you got another one in the works, I'm sure?
I do, and so I have a collection in the works, and I'm excited about that, and I sure hope that I don't have to have another COVID crisis to give me enough downtime to, publish a book that's very meaningful. So, yes, you can anticipate about 10 in total of the collection, and the final one will probably be about derivatives and, like micro scalping derivatives, but I want to do the macroeconomics of things first, kind of.
You just a little nerd, Tillie. We love it.
Right.
All right. Yes. The audience knows me well. Big Eb says she's lapping you, Merlin. You better get on your book. I know. I've been just so busy with other stuff. I guess I'm on quarantine. I should get the book going. All right, Tillie. Well, thank you so much. I appreciate it. They also have some comments on the cat over there. Did you take the hedge clippers to your cat? That thing is just.
Oh, Baylor, she's right here.
Baylor's all snipped up. Look at that. Holy cow!
Yeah.
You look like a little lion, like an albino lion.
Yeah, she's actually watching the show right now.
Great. So basically, I'm putting your cat to sleep. All right, Tillie, thanks so much. I'll have you on probably another week or so, and thanks for doing those market updates. We appreciate it.
Awesome. Guys, have a great holiday weekend.
You too. Take care. Hey, guys, I even forgot it's a holiday weekend. Tells you how in tune I am. I'm like, oh, great, I got a lot of work to do on Monday. I don't know if Tillie's driven a Tesla. Knowing Tillie, she's like an old gasoline car girl. I remember she used to have a really loud Mustang. I think she's a BMW girl now, but there you go. All right, what do I got for you guys? Let's go to at least for some economic announcements and updates, and I'll try to do a little open Q&A here. We were talking about kind of this running of the bull markets with Tillie. Here's what's happening for tomorrow. And this is really all I have for you guys. I had to move things because, God, there are so many announcements for economic announcements this week. Look at this just ridiculous list. You have tons of manufacturing information coming out for the European Union. You also have ISM manufacturing numbers for the U.S., final manufacturing. Really, the U.S. stuff is down here near the middle. All of it happens during market hours. Remember that. 15 minutes in, you get final manufacturing PMI for the U.S. 30 minutes in, you've got ISM manufacturing PMI, construction spending, and manufacturing prices. So a lot of announcements for the U.S. Keep in mind, tonight you still have an announcement on, I believe, the Australian dollar coming out with a rate announcement tonight as well, and that is not on this list. So that's pretty much all of it for tomorrow. Let's see, what else do I got? Questions for tomorrow. Why, Don, you want to come on Friday? I think I actually have a Wednesday open if you want to do Wednesday. I have Wednesday and Friday open if you want to come on. We talk about technology going forward. What other questions you guys got for me? Any currency outlook? I wouldn't say I really have any currency outlook. I was checking out the Canadian dollar last night. Let's bring this up to a daily here. And bring up just some of them. I mean, I've really looked at this Canadian dollar because it's just been getting weaker and weaker and weaker, or USD CAD, what I meant to say. Getting weaker and weaker. I actually thought we'd see a little bounce just a bit before. You're really headed towards these lows, right around that 129.60. Now, if you want to play it, I think that there is an opportunity at that 130 mark. You look at a low that's going back to lows for the year. That's continuing to show weakness in that U.S. dollar. More U.S. dollar means more exports of oil and gold. So, I do expect there to be a bounce, but at this point you're catching a falling knife. So you got to be really, really careful with this one on USD CAD. Other one I was checking out was British Pound. And I like this because you're coming back into those highs from 2019, right? And it's coming in aggressively too. It's really looking strong right now. I think that this is reflecting optimism on a finalized Brexit deal. So you're coming into these all-time highs. It's just the tricky part becomes how you trade it. At this point, I'm bullish on the British pound. I just get really iffy about buying it right here. If you do the quarters theory, I would keep an eye on this 134 mark if you're thinking potentially shorting. It did hit it today, and now it's starting to sell off a little bit. So those are the two I've been checking out. Someone asked me about the Euro USD earlier, or via email. There's your Euro USD. Similar situation, although I don't like it as much as the British pound because this is still stuck in a little bit of consolidation for the past couple of weeks. To make more sense of it, you'd have to go back to a weekly, and that paints obviously a much more bullish picture, which leads right into this area of supply that it's currently headed into. So certainly 120 on that Euro USD is going to be a nice area to be paying attention to. What else do I got? YM and Russell. Well, I don't usually look at the YM, but I think I'll add it to this list at YM. It's still the same picture with the Dow. The Dow obviously made that big change last night, kicking out a few companies and bringing in new technology companies to make up for it. I think what you'll see is weakness in the Dow. You are coming near that 29,000 mark, but right now it's not really talking much to me, especially if I go back to a daily. Oops. .D. Go back to your daily here. It wasn't really at an area of supply, nothing really strong. So that's the one I'm least interested in. If I look at the Russell 2000, I'm actually liking this one right now. It's pretty simple for me what I would do. You're looking at it basically saying if it crosses down below this low of 1541 or gets above this high of, let's call it 1605, then jump on it. Right now you're just stuck in that range for the better part of almost a month. So that's it. Wrap some bands around it. Make sure you stick with your plan and have some patience on that one. All right. I think that will do it for me. Okay. And by the way, Brendan, you're posting some pretty interesting articles on, I don't think $100,000 Bitcoin is unreasonable. Some of the targets that I'm seeing posted, you had another guy on there was doing like 250, another guy was saying 500,000. I feel like 100,000 it would not be that difficult to get to, especially with the destruction that I talked about, which is the removal of coins from the system. You guys saw there was a big hack last night. Somebody lost 1,400 Bitcoins. I saw a very funny, this guy that I follow on a Bitcoin Twitter guy. He copied some guy's post from a few years back. I think it was 2011 or 2012. And the guy was all upset. He goes, man, I really should have held my 1,700 Bitcoins. I bought them at 3 cents and sold them for 6. And now they're 80. And look, 80 cents. He had 1,700 Bitcoins. He sold for 80 cents. It would have been almost $20 million today. Yes, Joseph. Brandon Wendell is tomorrow. And I'm going to have, I think, let me check the calendar here. I apologize. I didn't update the calendar. And I'm losing track of my calendar. I should be more up to date with that one. I guess we'll have Don Fron on Friday. And let me bring up my calendar here. Hold on 2 seconds as I get you guys all set up to find out who will be on the program. And I'm not exactly sure who that's going to be. I think it's Brandon tomorrow. And then from there, we will have another guest on. And I don't know why it's not showing me my calendar right now. I had it all set up. Brandon tomorrow. And then I could have sworn I had someone lined up for Thursday. I guess I just didn't put him on the calendar yet. Oh well. So right at this point, I got nobody scheduled for Wednesday, Thursday, and I'll have Friday with Don Fron. So there we go. My next crypto course at OTA, no crypto courses at OTA. They don't want to do crypto stuff right now, so we'll stick. We'll stay out of that one. Abby, so is Exxon out of the Dow? Yep, Exxon is out of the Dow. Goodbye. After 92 years in some capacity, Exxon is out of the Dow. I feel worse for Raytheon because Raytheon just finally got added. It's such an elite thing to get added to the Dow, and it was kind of because of a merger, I think, with Northrop Grumman, if I'm not mistaken. They were added in April, and all of a sudden they're out in September. Great. It was scammers. It was scammers hacking the Bitcoin. There's so many scammers out there, guys. Bottom line is you got to be real careful about the wallets and devices you're using to store these things. And number 2, make sure you never, ever, ever, ever give out your private key or any access to it in any way, shape, or form to anybody. All right, guys, that's going to do it for me. Tomorrow we have Brandon Wendell on the program. I'm not sure what Brandon and I are going to talk about. So if you want us to go down a specific avenue or venue, let us know. You can send that comment in. Just go to TraderMerlin.com. That's the easy way to send us your comments and questions, or you can just put it down below the video here. Unfortunately, you won't be able to upload charts below the YouTube video. So if you want to send charts or graphics or something, feel free to send it in TraderMerlin.com. And of course, hit that like button, subscribe if you are new to the program. That said, everybody have a fantastic evening. I will see you all tomorrow.